Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome to the Foundation for the Study of Cycles. Another episode of Cycles TV. We have Monday, same time, same place. You're with me watching Cycles TV. In today's episode, I want to update the current market environment, looking at the S&P 500 weekly and daily. And as you know, here on the channel, we pay special attention to the cycles currently evolving in these assets. So what is happening on the markets? That's the purpose for today. Let's review the weekly and daily cycles. As always, I'm live. So today I promise I will take some time to get back to your questions, because last time I think I missed the opportunity to get back to that. So today I promise. But first, we need to make our hands dirty and do some cycle analysis on these assets. And maybe also upfront, don't expect a clear direction. I've just pre-did this analysis for myself, and there is no simple conclusion in regards to cycles on the S&P 500. So there is no single answer at the end of this session, but let me explain you why. So here we have the weekly chart. Let's start with the long-term view and the weekly data series first. We see the weekly S&P 500 series here, and at the bottom the spectrum, which is generated for the current data under review. If you're new to cycle analysis, what we're doing in the first instance is we look at the spectrum, which I'm hovering here, to identify the most important cycles, which can give us a clue about the up and downs or expected turning points from a timing perspective on a chart. So therefore, first, we are looking to get the right length of the cycle. And the length is derived here on the x-axis, and the highest amplitude, the highest peak, which we can identify in the spectrum, gives us then a clue about the most dominant cyclic length in the data set, which has been analyzed here. So in that case, if you have a full view in the spectrum, there is a clear dominant peak with a length of 176 weeks. Be aware that we are talking about a weekly length here. There are for sure some other peaks here, which we then need to apply our method how to filter out maybe cycles which don't give us a clue to do a projection, or cycles which are there from the length perspective but are just too small or statistically not relevant to make a valid projection. So that's the second step. So once we have more or less the most important cycle, we take into account some additional parameters like the visual shape. We always want to see a clear and nice peaks in the spectrum. And then second, we are looking for other metrics like the Bartel score, which is an indication for the statistical significance, or the strength score, which is also a measure how that cycle with that length has an impact on price changes. And it's related to one point forward in time, which is 1 week, and then the difference of price changes that cycle made. So we have different measures taking into account. If you don't get anything individually analyzed, you can refer to the ranking score, what we have introduced here. The ranking score automatically takes all these different measures into account. So like different features of a cycle, the length, the amplitude, the visual shape in the spectrum, the statistical significance, the strength score. So a lot which needs to be revised. And this ranking score is what we call artificial intelligence, or Microsoft calls it like a co-pilot. So it helps you, instead of visually making all these conclusions on your own, it gives you a pre-rating if a machine would take these features into account. This is the ranking a machine would come up and proposes these cycles to select. That's the basic understanding. And you can see that the ranking number 1 is the 176-week cycles, which is also obvious, or that would be anyhow the one which we also selected just by visual inspection. The second cycle then is maybe more interested as it comes to 117, and that peak here in the spectrum is not as easy to see or hear. It's the second peak here, but it could also be 140 or 117. So from the peak, just visually, it's not easy. But as the computer took more measures into account, I think here it was the strength score, so it seems to be a higher impact on price changes. But that's just the explanation how this works, how cycle analysis works, and how a machine these days, or the computer, can help us identify the relevant ones. The spectrum is more or less the first step to do digital signal processing if we deal with dynamic cycles. Dynamic means we don't want to force the market into a static cycle framework. We don't care about static cycles. Nothing is static out there. So the length, the amplitude, the phase will vary. So therefore, we need digital signal processing, which helps us to identify the current rhythm, the current variation of the cycle. That's why we use computer in that case, which guides us. But long story short, 170 weeks, I think that's what you got, is the long-term cycle, which we need to have the most attention. And by the way, that finding is not really new if you are a follower of that channel or the follower of the long-term analysis I'm doing here on the US stock markets. This is the cycle we are monitoring for 2 years now. So, and nothing has changed in regard to that perspective. So this cycle helped us to identify the big peak here at the end of 2021. We had some difficulties here in finding the short-term bottom here, just based on the longer one. But anyhow, we now confirmed that we are in this upswing phase of this long-term cycle, which has not ended yet. So we are now end of April, and this upswing is projected to last into end of this year, so into November. So that's why I called in the beginning of 2024. So after this, from last October, after this upswing here started, we have realized that we are now in this upswing here, which helped us to guide the way up. But now we are approaching, we are not really close to, but we are coming in the late state of that upswing cycle. So from now on, we need also to take shorter term cycles into account to fine tune when this possible top from a cycle perspective will occur. Because the weekly is just more the long-term window, the long-term roadmap we are seeing here. But as said, this single most dominant cycle is in the upswing until October. We could now add the second important cycle here with the length of 117, and this is then, it will bring, and this is why I said in the beginning, there's no clear single answer at the end of that session, because if we now just have an individual look at this shorter term cycle, 117 weeks, you see that this cycle just started to roll over to the downside. Up to beginning of this year, these two long-term cycles have been in alignment. So even January, February, so October, February, these two long-term cycles have both been in their upswing phase, which is the acceleration in the markets, I think, have been also a root cause based on two dominant long-term cycles being in the upswing. Now the situation starts to change. And so we have the first long-term cycle, which has rolled over. You can also see from the technical perspective, we are more or less close to almost perfect top here at the upper band, but close to. It's not really perfect. From a really perfect perspective, we would have seen a push through the upper band and then a cross down below. So this is what we haven't seen. So it's not really perfect, but timing-wise, this cycle has now already rolled over. So these two cycles are acting now in parallel, and if we sum them up, so if we put both into this composite view, you see the one cycle rolled over more early already, the other one is expected to roll over, which, if you bring this in a composite, exactly shows these two long-term cycles are more or less topping now. But this is just a composite model. You really don't know which cycle has now more influence on price, so the 170, which is on the downward phase now, or the 176, which is still upward sloping. So this is what nobody knows, to be honest, in advance, which cycle is the stronger long-term cycle. As a composite, it looks like we are topping now. So, but anyhow, that's just the weekly. But you see now, I would say at least from now until November, we come from a long-term cyclist perspective into a real critical timing period. So the next 5 months, let's see, 4 to 5 months, in the situations where the longest long-term cycle starts to roll over, while the shorter long-term cycle has rolled over already. Long-term cycle, current perspective. It always helps, and this is what I always would recommend to do, at least if you don't have that kind of clear perspective looking at cycles. And to be honest, that's in most situations the case. It's not as easy as it might look as. You should have an understanding about what have your previous analysis shown you on the long-term perspective. Because normally you don't do a cycle analysis just once and then that's the roadmap for the year. You don't do that. You need to update this long-term analysis. So therefore, as if you have followed that channel, we regularly update the long-term perspective on cycles, because this helps you to get an understanding of the path where we are. Cycles do not change from one day to the other, or from 1 week to the other, or even long-term cycles don't change from 1 month to the other. These are just 4 data points in addition, 4 weeks. So if the long-term model anyhow stays stable as we had it before, it gives you a little bit of more support of that this model is a stable model. And therefore, I just want you take back with me into the year of 2021, where I showed the first outcome of that analysis here on the blog I'm doing here, also on the foundation. It's a free article, and I created that composite model here. Let me zoom in here with this 3 cycles back in 2021. I'm referring to that because I want to know also. First, please recommend we use the cycle of 176 weeks. So this is more or less the same nominal cycle, which 2 years back, 2021, 2 years back, has a length of 186 weeks. So you also see now the benefit of cycle analysis. We can measure the variation of that cycle. So it's still one peak in the spectrum, as you have seen, but instead of 186 week, this key cycle has now varied the length into the length of 176. So, but we have still the same cycle. So we are not talking about a complete different cycle here. And now please pay attention to the other ones, 381 and 143 weeks. Yeah, and let's now go back to our cycle analysis. We see we also have a cycle 140. It's exactly this second peak here, which was not detected in the current environment, but 2 years back, that cycle was more important. And we also saw that the cycle of 386 weeks was also relevant in that data set series. So and you see here, I mean, it's a clear bump in the spectrum. Yeah, there is no 310 or 290 or 400. It's exactly the same peak here. Not exactly the same, but you see there's one really long-term cycle in the spectrum. There are not 2 or 3, it's 1. See, just a variation. So I would now add more historical data to the analysis to see how the analysis might change if we bring more and more data in the analysis, because the standard setting, and this is what you always or you should be aware of, in the standard environment, we always start with the analysis using 850 bars, in that case 850 weeks for the analysis. So let's now add more historical data to see maybe if the other cycles get more relevance or change. I just want to see if there is a big change in the cycle spectrum if we add more data. So therefore, let me just show you. We just I will now open that up just to load more data into the analyzer. You see now the light blue has not been used, and I will now extend the analysis to include these big peaks here in the year of 2000 and 2007. So let's go back here before this peak happens into 1997. So I will change the start of the analysis to this point here and then recalculate the spectrum. So now you see the dark blue has extended. We have now close to double the amount of data points which have been used for the analysis. And let's get back to the spectrum here. So the most important one, now 185 weeks. So by using more data, we see the same dominant cycle, 176. If we just use the current analysis, if we extend more historical data, you see on average that cycle has been a little bit longer, but it's more or less the average length over the data set we are now analyzing. If we just use the current situation of that cycle, it looks like that this cycle is shrinking in regards to the length, that's the variation of cycles. And we can measure the variation of cycles if we just use different time going back in history, putting into our digital signal processing. So therefore you can see if you put more data in, and if there's the same more or less nominal cycle, how this cycle varies over time. But in the end, it's close to, we have the 185, and we see that by bringing more data, and we still analyze up to today. Yeah, so we have the last upswing here now in the analysis. So, but you see that by adding more data to the historical view, this 375 long-term data has a much higher amplitude. It seems like the amplitude of that cycle, that's also a kind of variation of cycles, seems to decrease if we just use the more recent data. But you see we have a big peak in the 350, 300 something. And we also have more, so the 114 has not been selected here because the Bartel score has been very low. And in that instance, 146. And as said, this analysis goes up to today. So yeah, we could argue it seems like the 146 is more phasing out, and therefore the 114-week cycle is more, the amplitude is more rising, so seems to have more importance to changes. That's exactly why cycles vary their impact on price analysis. But you see we have the same three dominant key cycles here. So let's start with the 185. Let's add the 375. And in that case, the 146. I hope you understood why I did that selection. And just to cross-check, that's also the 185 is the one which would be selected by our ranking score. And the second important one here is the 375. Okay, so let's do that. And what we see here, and that's the reason why I did all these different composite analysis here now together with you. The composite of these 3 cycles, and these are exactly now the same cycles I used back in the analysis in 2021, yeah, which was quite on track here. And we have exactly the same cycles more or less in our data set today. And this now, that composite gives us a peak in September. Yeah, September. So that's what I said. Don't expect a simple answer at the beginning of this stream here. So now we have 3 dates or 3 peaking points of the long-term perspective. So the earliest one is peaking now. So the shortest long-term cycle is peaking now. The longest long-term cycle is peaking in November. And the composite cycle out of 3 cycles, which using a little bit more data, is peaking in September. So, and that's why I said I think the long-term cycles now tell us the second half of this year we should expect a key top in the markets. Maybe it is already there, so we have now arrived at the earliest point. Maybe we see a bounce again up. We will move to the shorter cycles in a second. So maybe we move sideways. And then latest from now into the period of November, all cycles, long-term cycles, move then into the next longer downward phase, which latest then starts from the long-term perspective at November. That's the long-term perspective. I mean, we don't trade time. We don't trade just based on long-term analysis, but we always need to start with the bigger picture. That's the bigger picture. So now, therefore, we will just go into one time frame, which is shorter. So let's now have a listen to the daily cycles. So we do the same procedure. A cycle analysis follows a clear guideline here. We use the same procedure, now using the daily cycles. Yeah, let's start with a fresh chart. So this is the current daily S&P 500. Same starting point, 850 bars, daily chart. We see the spectrum here at the bottom, which is also not an easy spectrum to just jump to one clear cycle. We have different possible cycles which are shown here in that spectrum. So let's go through the spectrum first, because I mean we are here to learn something on picking the right cycles for that. So looking at this chart here, first starting with the spectrum. So I think the 3 cycles which pop up here are these 3 peaks in the spectrum, 83 peaks, 83 days. Then the other one is 175 days. By the way, maybe it's not obvious for you, but these 2 cycles here, 83, 175 days, are related by an harmonic relation of 2. Multiply 83 by 2, and you will closely arrive at 170. And here's the peak at 175. So that's also very nice if you see harmonic relations between 2 peaks here, because that's like music. If you play 2 notes which are in a harmonic relation, then it sounds beautiful. And these harmonic relations always appear in nature and science in different combination of composite cycles. If at least in the real world or nature, you will always have harmonic relations of a combination of cycles which is there. So at least these 2 look very interesting, 83, 175. Then we have another peak here in between, which is 139. It's also a valid peak, so we have it in the spectrum. It has a clear left and right sharp peak. I mean, it's blue, the triangle is blue. and the size of the triangle is not as large, so it means the Bartel score and the statistical significance is not the best. Well, that could also be used. And here to the right, but here is no clear peak, so it seems to be there seems to be a longer cycle, but we cannot really measure it on a daily cycle, because a daily cycle over 400 is even longer than 1 year, and then we should switch more to a weekly analysis to detect that longer term cycle. So from the daily cycles, it seems the longest valid is 175. Then second, I would add the harmonic relation of 83, and maybe then, if we want to add more to the mix, 139. Yeah, and the shorter ones here, I think, are too short anyhow to really have an impact compared to these 3 here. So I hope this helps you also to understand how to pick and how to read a spectrum. If we now look in the table, that's more or less also what our computer or our co-pilot will tell us. So if you don't have the time to gather all that knowledge, where do I find the right cycle to pick? The computer did exactly more or less the same logic here. So the highest ranked cycle has a length of 175. Yeah, so this would be the most important cycle selected here. Then interesting, the cycle with the 83 is just the third ranked cycle. So not the second one as I would pick, but at least one's third, and the second one would be the 139 here. So we are not completely in alignment, but if it comes to the relevant 3, we are on the same page here. So okay, so now we can start to check where those cycles are, because up to now we only have an indication about the length. Yeah, that's also what you need to account. Often, people talk about cycles only referring to the length of a specific cycle, but that's only half of the truth, or that's only half of the story. You always need to understand where that cycle is in regards to the phase of that cycle. Because if you don't know the phase, the length information is worth nothing. Yeah, and that's then the second step is now we activate that cycle on the chart here with the 175. And from the digital signal processing, we know how this cycle is aligned. So this is the current point in time. So where we are in that cycle, that's also important. So this is seen here. And now you see it's interesting that the most dominant daily cycle rolled over now to the downward phase, which is now moving into summer. So therefore, a key dominant daily cycle is also now rolling over since, the key top we saw on the markets here, end of March or early April, is in alignment with the daily cycle, which is now in a negative phase until July. Maybe you remember this is in alignment with the shorter long-term cycle, which also rolls over. So we have a shorter daily cycle and a shorter long-term cycle, which are in alignment now into summer. Yeah, so the daily also rolled over. And you see this now if we take into account some technical analysis, which you know that one of my favorite indicators is here built in, but this is a technical analysis based on the relative strength, some tuned bands here using the cyclic performance. You see that we issued the first sell signal since 2023. So since this top here, since this top here, there was no sell signal. We have been close to here, but as I said, this has not been generated. And now here, just back beginning of April, this technical indicator, issued a sell signal, so which has been in alignment with the weekly. So if you just have a close look to this current analysis, here we have a clear picture of the daily dominant cycle from a timing, now in alignment with the technical price-wise signal we derived analyzing price. That's what you always should take into account. The cycle is just based on time. Yeah, it's no indication has the price moved too much to the upside or downside. This is measured by technical indicators, which are purely based on price movements. And this is what the relative strength indicator is. And you just align the parameters using the right setting for calculating this. And this gives you a price-wise a sell signal at the point where timing-wise the cycles indicate a top. So this was a perfect short-term daily sell signal at that point in time here. Now let's put the other cycles into the mix. So we have a second cycle here, 132, and even the harmonic relation to 83. And you see how this even emphasizes more the situation of having a key top here in at least into June, July. So this more or less still counts for short-term downswing. But until then, and you see then even this short-term composite out of these key dominant cycles indicate an upswing phase, and there are all daily cycles are in alignment and in agreement into September, so later this year, which is then also alignment with the other two long-term cycles. So taking these two cycle analysis into account, it looks like we have now seen a first top, which occurred early April. But having this more comprehensive cycle analysis was taking these 3 daily cycles into account and the technical condition, the more or less conclusion I draw from this analysis is more, maybe we move down a little bit more, but this pullback might not be the final top. Maybe we see, so I think 2 scenarios come out of that. So we have a first pullback in. We should see a correction of that pullback. I don't know if we make new all-time highs or if we just have a kind of sideways choppy phase now moving into September or November. So more or less just a small range we might be in from now until September, November. So there are if you go one time frame even lower, there are trading opportunities from a daily, weekly perspective. Maybe we are now in a tight channel until September where we see the swings, and then we will see final top coming in September, November, and often at big tops you see these divergences on the indicators, so we might need another top then in the markets, with then comes in alignment with the divergence on the technical cyclic RSI on that cyclic analysis. But this is just guessing. This is just now how I read the analysis. You need to derive your own conclusions on what I showed you. So the key purpose here, as always, is what do we take out of that cycle analysis? And I think these situations where you don't have a picture perfect, clear, one single conclusions is more or less, that's our day-to-day life as a cycle analyst. We don't have a day-to-day life with just clear, simple cycles up, down. Yeah, that's easy. No, it's not. We really need to analyze the different conditions. There are always more than one cycle active at the same time. We're dealing with nature, we are dealing with reality, we are dealing with emotions, we are dealing with different geopolitical news streams which are rushing in. They are all based on rhythms on, we don't know the root cause, but we can analyze which cycles are currently there, and then we need to make our judgment which of these cycles we think have the most influence on price movements. And as I try to bring into this kind of analysis, this requires knowledge, this requires really day-to-day analysis, how these cycles change, how they vary, and then you can use it as an additional instrument timing the markets. These cycles help us getting clues on market timing. And then if you take your technical analysis, your price analysis, your economic analysis into account, then this helps you becoming a better trader. Okay, that's the analysis for today. So I hope at least it gives you a clear path on the long-term, short-term S&P 500, how you interpret the current cyclic condition. And now I will pay attention to some of your questions. So therefore, I will now look into the live chat sections. If you have not already put your questions in there, I will start with the first questions which have been rushed in. So Adrian, I've seen you have been one of the first ones jumping in. So let's pick up some of your questions. The question refers to the cyclic RSI. The upper and lower bands of the cyclic RSI indicator are different in the Cycles app. So the Cycles app is what we've just seen here compared to the TradingView version. I'm using the same cycle length, of course. Is there a way to fix this? First, it's the same calculation. In general, there's not really a different calculation that's upfront. And for those who are just new, there is a free one available in TradingView. So you can draw that, you can use the indicator, the script is there. So just reach out to TradingView. I have put that indicator there. I want to improve you all out there. It's a free indicator available. To your questions, it's using the same length. The only thing you need to really ensure is that you see in the Cycles app, there's in the upper left corner, there's always shown which length has been used for the calculation of the bands you're seeing here. So it's not always, so even if you pick more than one cycle, so you need to validate that. The second cross check I would recommend doing to compare, please also maybe check if then 166, so double the length which is shown here, and try to compare this to the TradingView version, or use half of the version here and compare that. So please check out, but I need to cross-check then this on my own, but this needs to be validated. In general, my answer is, Adrian, the calculation is the same. So maybe we need to validate with the length setting. If you see more deviations on that, please send me some examples and I will validate these then and go more into the details of that. It should not be the case. The roadmap of the Cycles app, we need to dedicate a special session on that. But there's a lot happening in the back. At least this is what I can tell you. In the foundation, we are discussing big upgrades, but there are different ways to go. So therefore, I cannot give you a single answer. But what I can tell you, maybe during the last month, there haven't been no big improvements or changes, maybe if you refer to that. But we are working heavily on a completely additional improved user experience with a lot of additional features. So we listen to all of your comments, which you have given also here in that session. And even though maybe you've not seen them coming live, I know you want to get more details, Adrian, but I need to dedicate a show. The only thing I can really promise and tell you here is there is a huge roadmap in the making. We just need to a little bit fine-tune and make the strategic decisions on some of some special cases here. Adrian, but I will think with my colleagues about a special episode on a roadmap. Okay. That's a very technical question, and I like that. So first, when using Millard's cycle highlighter, I recommend the book on I think Brian Millard, because he tried to extend the work on Hurst cycle analysis, and he wrote additional books on a cycle analysis. So you will find them in your favorite bookstore. And one of his publication has been talking about a so-called cycle highlighter. And with this cycle highlighter, he plotted, he tried to identify the key cycle. With the cycle highlighter, he was using a centered moving average, which means he has using the moving average and then centered that moving average. This is a valid method, so maybe just research on a centered moving average. And the problem with moving averages is that you lose the last data, because the moving average can only be calculated for the past, and if you use a moving average of 20, the last 10 data points can't be calculated. So you need to find a way to plot that centered moving average into the future. And the question now you raise here, Bamdad, was how that ideal cycle is calculated. So, and you tried more or less to answer yes. So what the cycle highlighter then did is to find the theoretical sine wave, which has the highest correlation to that centered moving average as an overlay. So you need to analyze the deviation between the theoretical sine wave and the centered moving average. And if these both are in alignment, then you just use the sine wave, which is then plotted in the future. So you use the centered moving average, the cycle highlighter, and then you just append the calculation of the sine wave for that cycle length, which fits. And then you can plot this centered moving average extended into the future. And by the way, this is also embedded in our platform. So therefore, we've not talked about that, but the cycle highlighter is embedded. Let me show you how we have included that here. The cycle highlighter. Okay, let's clean up there. So I've just activated, let's maybe remove the composite. We just want to see here now at the bottom. So, yeah, it's a very short-term cycle, but let's explain it here. So the cycle which has been selected here is 17. It's the shortest cycle found here, but the method is the same for whatever cycle you want to analyze. So and the dotted blue line you're seeing here, this is the centered moving average calculated by the length of 17. Yeah, and you see that this calculation ends here, I think 8 bars or 9 bars, so half of that cycle. You can't calculate the centered moving average now for that portion here. So this data is missing. So, but this is now overlaid with the cycle with the length of 17 and the current phase. So what you first always try to analyze if there is a good fit between the theoretical sine wave with a length of 17, so the bottom, so this is the centered moving average calculated based on price. This has nothing to do with the cycle or sine function, the dotted blue, and the red blue is the theoretical sine wave of a cycle of 17. So here we have the top of the centered moving average. Here we have the top of the cycle. So here we have the bottom of the cycle, and close to is also the bottom of the centered moving average. So you see that we have a sync, or often there is a sync between the centered moving average and the theoretical cycle. Here we have a flat centered moving average. You see here price was just moving up, so we don't have a downswing. So the centered moving average is flat. Now we have the cycle here. So, and the projection, or if you want to plot this future now, this centered moving average, or what Millard called the cycle highlighter. The blue is the cycle highlighter here based on Millard's centered moving average. You just extend the blue line with the theoretical cycle. Yeah, and this gives you the extension of the cycle highlighter from Millard using the theoretical sine wave, which would fit to that cycle length. So great question, great concept about the cycle highlighter from Millard. I recommend to everyone reading the book from Brian Millard on that topic. And as you see, we also put a perspective of the cycle highlighter in our application. Thank you for raising that topic. I think it would dedicate more time to that, going into the specifics of the cycle highlighter. But it's a good tool. What indications, Brad, what indications are there, if any, to watch for when a cycle might invert, as you speak about it? Yeah, that's a more, the inversion of cycles is a kind of secret which has not been revealed by anyone so far. So it seems like cycle inversions take place, but nobody really can explain them. One argumentation is there are no cycle inversions. They have been just false projections up front, and then it's just an excuse for a false analysis up front. But I don't know, maybe they are there. So I haven't, there is no single answer, and I think no one has a clear answer on that. If you ask me about indications, my personal experience with when so-called inversions take place is in most cases at the half point of the cycle length. So at least this is when I pay most attention if a cycle flips, or inverts. So it inverts means a price is exactly doing the opposite as the cycle projection should suggest. So this is then what it's often called after the fact an inversion. As I said, it's also then an excuse for just the wrong projection you did in the beginning. So if you detect something after the fact, it's anyhow worthless. But so from timing-wise, and let me show you this, what I mean by saying timing-wise, an indication is, let's use a longer cycle here. So let's use our 175 long-term cycles. So this is the midpoint of that current swing. So at these midpoints, which I try to show here on this timing-wise. So I'm just talking about time. So when we arrive, at this point in time here, which is, what is that? Mid-May? Yeah, mid-May. So that's the midpoint of that downward length here. That's my experience, that at these point in times, cycle inversions, or most of the time, if a cycle inversion happens, they happen at these midpoints. I don't know why. I cannot explain it. I have no reasoning for that. It needs more research. But Brad, that would be my answer. These are the indications I'm looking for. There you need to be careful if price reverses. The AI ranking score. Anes, so on the subscription level, we have two different key subscriptions, so the basic membership and the professional membership. And for the basic, we just offer the basic set of doing cycle analysis, and the AI ranking, which is this ranking score, which I've just explained today, requires a professional subscription. So, and I cannot answer if this will become to the basic version, because this is part of our more sophisticated features, and we want you as users to decide if you are fine with just looking at a spectrum and then applying your knowledge, selecting the cycles, or if you want to use these features and then you need to upgrade. So right now, and we have no timing for now, this is part of the advanced analysis professional package. In the basic package, the ranking is at least based on knowledge and education, but by the way, that's what we're doing here. So I hope I more or less explained you how the AI algorithm works. To be honest, this is more important to understand how the ranking works than just relying on a computer. But it's a fair question. So, but I tried to give you an honest answer. Yeah, you see maybe honest, you're more or less thinking in the same direction as we are thinking when it comes more into the topic on generating trading signals. And maybe I need to a little bit extend on that topic here. So you see that the cyclic RSI, the AI ranking, and if you have the numbers, you are close to generating automated signals based on timing informations, long-term shortly, in alignment with technical indicators. But once you provide that kind of analysis, we are leaving the boundaries of the foundation for the study of cycles. I completely understand that this is what a lot of people out there like you, like me, which are applying this to live trading environments would require, even to automate, have dashboards, have alerts, have scans, have filters set up. So I think once we start that road, every week we will discuss new features, which we all want to have. Me too, I'm with you. But at least there we have a very critical discussion in the foundation and in the board of the Foundation for the Studies of Cycles, because even our founder, Edward Dewey, was very critical that the Foundation for the Study of Cycles is not here to generate trading systems or trading systems. We want to dedicate our work, that's the reason why I am here, to understanding cycles, how to analyze them, how to pick them, then applying that knowledge in different knowledge areas. And financial markets is just one knowledge area. We want to have more time for the analysis regarding to cycles than only solely focusing on the trading environment. So, Hannes, I completely understand your request, and you can be sure we are on the same page. A lot of us want to go that route. We will work in that direction more and more, but that's not the only proposition for the Foundation for the Study of Cycles. At least I hope this explains a little bit the broader picture, why we are a little bit careful of just going that route more specific. Brad, why have you chosen to calculate the RSI in single step? Second step. First, we just use the standard RSI formula. We have not invented or don't want to invent something new. The key feature we added to the RSI was more instead have just the standard 14 parameter for whatever, that we adjust the length setting to the most valid parameter for an RSI, because often people just don't know what to put in for the length calculation of that technical indicator. So the primary intent was not to provide a different calculation for the RSI. The RSI is the RSI. We just provide an indication what length for the RSI you should use. And using the knowledge of the most dominant cycle in the market will always improve whatever technical indicator. And this does not apply to the RSI per se. So as another step, and therefore for sure, you could then add additional methods to smooth an indicator, or what we did, introduce dynamic bands instead of just having static bands. So that's then the second way we went, to use more the dynamic bands and instead of having static bands at 30 and 70 and then see them as a static set, but because these bands also differ in uptrending or downtrending markets. So the answer we apply to the so-called trending offset is the dynamic bands, which helps to filter that out. But for sure, you could also add additional smoothing, like we promise here. But then I think there are a lot of derivats thinkable for the RSI. It's just the standard way we go. And I like your way to add additional smoothing. So valid proposal. Yeah, Dandy could be. So this your comment relates to the question earlier. So why there might be a deviation between the cyclic RSI, which the other colleague raised the question, and maybe one answer could be if the input data, so the raw data might be different. If we are using here the input from Yahoo Wrapper and TradingView, they also recalculate the indices based on their own calculation. I mean, thanks for bringing that in, Dan. That could also be a reason why it might look different. Okay, so I would more or less call it a day. Yep, I think that's at least what I see for today. So again, we are close to an hour, but that's why I'm here. I try to dedicate a lot of the time going directly into your questions. I think that's the value of this session here, also having the opportunity to raise some points. And otherwise, I just want to do a live analysis, how I would do it if we are sitting in front of our cycle analysis, so that you are not alone sitting in front of whatever technical platforms or cycle analysis tools. Maybe this helps you, give you some ideas on how to apply cycle analysis tools to data sets. Thanks for joining me today. Like, subscribe, tell your friends. Join me next week, same time, same place, Monday.